All right, everything looking good on my end. Should be ready to get this stream started. Let me know in the chat if I'm coming through loud and clear. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 12/5/2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Okay, great. So today we're going to go over, basically a couple main topics. Obviously saw a big dump on crypto over the weekend. As expected, we've been discussing the bearish divergence for some time, so it was no surprise to us. The stock market, obviously, as well, weekly bearish divergence, and we've seen quite a bit of downward price action. We also know that there is a large majority of cryptos and stocks that are in a bear trend, very, very clearly, and have been for some time. So let's take a look at some of these assets today. We're going to discuss two main things. First, with that move down in Bitcoin, we now see that futures chart has actually gapped down, which is not unexpected. We know whenever there's a big price movement over the weekend, we expect one of two things to happen. So if futures closed at 53,575, we know that if price action does not move back up to that level by the time it opens, we're going to leave a big gap like we did. So oftentimes what will happen is we'll either push back up and then reopen around that same level, or we will open and then push back up to fill that gap. Do we have to fill the gap? We do not, but probability says that we will. Now, sometimes it takes literally weeks and months to fill gaps. Like for instance, if we just scroll back here, this was in July. And at the end of July, futures closed at 32,200, and then it gapped up to 34,475 and then immediately pumped. And we never came down and filled that gap. So we still have a very clear gap right here from July. So again, will we ever fill that gap? Sure. I mean, eventually we probably will. Do we have to? No. Does it have to be anytime soon? No. So we could easily leave this gap behind and continue to sell off. But let's keep in mind also that we are at support. We have the 200 exponential and 200 simple moving average on top here, and the 200 exponential is the brighter blue one underneath. So as long as we're at those levels, while we're above those moving averages and they're sloped to the upside, this should be a buying opportunity because it's reversion to the mean. Now, we don't need to just buy right this second and assume price is going to go up, but essentially that should be our support level. And then that is the determinant for whether or not we're in a bear or bull market. So as long as we're on top of those moving averages, or they're both still blue on a daily, in my opinion, we are in, or by my trading strategy or, technical analysis strategy, we're still in a bull market. So we see now, though, we have flipped the pink on futures chart over the simple moving average. So that one has been going pretty flat for a while, but now it's technically flipped over. So if we come down here to the 200 exponential, we're likely going to flip that back over as well. And it's important to notice that we did actually flip the 200 exponential back here in June when we were considering if we were potentially entering a bear market. We flipped it right here, but we never actually flipped the simple moving average. The simple moving average stayed to the upside. So this is the first time that we are seeing this 200 simple moving average on futures flip. So we flipped it positive in July of 2020, and that was at 9,000. So that is when we confirmed a bull market. So this is potentially threatening that bull market right here. So we need to be very careful because we're doing something we have not done in over a year and a half, and basically 50, depending how you look at it, $40,000 to $60,000 in upward price action. So that is a very crucial level we're at right now. Also, this is the best area to take a trade, either to the upside or to the downside, because you find out if you're wrong very quickly. So while I'm not saying everybody should enter longs or shorts or whatever right here, these are key levels when it's nice to enter a trade, because the amount that you have to risk to determine if you're wrong is very little in the amount that you have to gain. Because if we continue to the upside and we take out the high from 50,000 to basically 70,000 to retake out the high, that's almost a 50% move back to the upside. So if we have like a 10% stop loss and a 50% potential move, and then that just assumes we're just going to the previous all-time high, that's 5-to-1 risk-reward ratio. And then if we break down from this level and enter into a bear market, we know the previous time this futures chart, obviously, so we have limited info. But the previous time we entered into a bear market was, basically like, arguably like January 2018. So if we were in a bear market from January 2018 at 15,000 roughly, and we entered back into a bull market April of 2019, that was basically over a year and, 66% downside that happened over that period of time. Now here we have a little flip right here. But again, when we entered into that bear market confirmed was March of 2020. And, you got back in basically around the same price if you're using moving averages to get back in. But we sold off like basically 66% again. So we would expect a similar move somewhere between, 50 to 85% sell-off if we confirm a bear market here. And it would likely, based on the 4-year cycles, last somewhere between, 1+ years of sideways to downward potential. So this is a very, very key area to look at. So we're just going to go ahead and jump right into crypto while we're on it right now and while there's so much going on. So again, this is a key level to watch. Our number one area is just right where we're at right now. Basically just 49, 50,000. 50,000 is a nice round number. So obviously we want to reclaim that level. We have the gap fill up here at 53,675 or 65, something like that. So that's an area to look out for. And then we have the 200 exponential moving average just below us at 46,845. So, and obviously the last thing I said was here we front ran that previous top right there. So I expected that we were going to overshoot it. And that's exactly what we did. Not only did we come down to it, we clearly overshot it, and we overshot it big time. This is also a key support right here. We have a bunch of price action on this level. We basically topped out right here, had to throw over and then sold back off. So there's quite a bit to watch right here. We're very clearly inside of the bearish control zone. The bears are in control. We moved out of the bearish control zone briefly, and then we got rejected and are back in it again. So what we're going to look for now is some divergence. The same way we look for divergence to the upside, we're going to look at divergence to the downside. Thank you, Edward and David. Appreciate you, gentlemen. So yeah, essentially we got a rejection right here. So when this comes down, we want to see how does this next peak line up with the previous peak, and then how do those line up with price action. So here we obviously have a much lower low on price action, but potentially, and again, this is theoretical, this has not happened yet, potentially we could sell off and then find support at the same level on the TJD Jewel Thief at like 12, bounce that same area or anywhere above it, and we would be putting in bullish divergence because we would be taking less energy for the price to go much lower. So that is a form of bullish divergence and one of our key reversal signals. Obviously, when we see bullish divergence at support and then like momentum or something else in our favor as well, or multiple drives of bullish or bearish divergence at resistance, etc., it's more and more reliable. So again, this is our reversion to the mean play. This is one of our favorite plays we like to make right here. When we come back down to the 200 exponential and simple, we like to use it as a buying opportunity. We do not often see it come back down a second or third or fourth time. So the fact we came back down here once and did it, that's danger zone, sold down below it. The second time, we at least didn't get back to the 200 exponential. So this third time, we put in a higher high here. If we come back down to the 200 exponential again, it's going to look, based on moving averages, worse than this one, because this time we front ran it. But if we come down to this key level right here, that's where we really get worried. We do not want to see Bitcoin take out 41,000. Because if it takes out 41,000, even though we put in a new high since then, once we lose this support, the most likely area we come back down to is that same low again at like 30,000 basically. So if we lose 40,000 and start closing below that on a daily time frame, we're looking at 30,000, and by then we will have confirmed on the futures chart a bear market. So don't want to see that happen if you're bullish on Bitcoin. But we did 100% expect this to happen. How did we expect it to happen? Well, let's look at our weekly chart that we looked at all the time and specifically spoke about. We have multiple red histograms, a hard sell signal, and we left the bullish control zone, and that was our dump last time. Took us down from 64,000 to 30,000. We saw the reclaim of the blue slope line, reclaim of the bullish control zone, and then we saw the exact same thing happen last week. We saw a bearish engulfing candle. We had a hard sell signal. We left the bullish control zone. We saw two red histograms in a row. We broke down below the blue slope line, and then it flipped it over red. So everything was pointing to weekly bearishness. We also have put in a high right here and a higher high right here. We have a high right here a high right here, and then a lower high here, and a lower high here. So again, we have clear bearish divergence on the weekly on all of our indicator oscillators. We broke down from key moving averages. We have a hard sell signal. We flipped the slope line over red. Everything was pointing to the downside. So what I urge everyone to do is take a little time and think about the people that you're listening to on Twitter or on YouTube or wherever else, people that are doing technical analysis, or buddies that are telling you to pack your bags, or whatever it is, wherever you're getting your content from. See, are they a credible source? Do they consistently talk about the bearish moves before they happen, or do they talk about them afterwards and try to explain why they happened? Do they go on Twitter and look at other people's charts and then come back afterwards talking about why there was a bearish break or a bullish break? Are they always bullish and then, they put out a 30-minute video and they're bullish for 30 minutes, and one time in the video they say, but we could break down to 30,000. And then do they bring that back up after we have a bearish dump and say, I did say that we could break down to 30,000. Remember, after the 29 minutes and 54 seconds of me being bullish, I did say one single sentence about how we could break down. Those people are useless. Do not listen to those people. Do not give those people any credibility. You want to look for people that are looking at things and showing you exactly how they verify these moves, how they're seeing things ahead of time, and then how to react to them. It's perfectly fine to not know where the market's going. That's actually intelligent, because no one knows where the market is going. But if someone is just bullish all the time in a bull market, or bearish all the time, and then they're right once we finally enter in a bear market, they're pretty much useless. You need to find someone that's using consistent technical analysis or fundamental analysis, if you so choose, and then giving you definable, clear areas and able to predict moves ahead of time based on technicals or fundamentals or whatever. Otherwise, hindsight trading or hindsight technical analysis is useless. All you do is come on afterwards, and you're basically just reading the news. 3 people were shot in Chicago last night because of gang violence. Sure, you're reading the news. Crypto dumped 20% and had a liquidation candle because of, X variable. Sure, you're reading the news. That's all you're doing. So if they're not seeing these moves ahead of time, they're not useful at all. And if they're coming back on afterwards and saying, I did say that there was a possibility we were going to sell off 20%, those people are even more useless, because they're basically just trying to cover their base one way or the other. So anyway, that's our weekly chart. Obviously, our monthly, not a ton of reason to look at the monthly right now. Not really telling us much. We basically have some bearish divergence developing as we start to roll over, but we only have one red histogram. We talked about the stochastic potentially coming up and getting rejected here. But again, this is just, the monthly chart is just too slow to trade off of for anything other than like multi-year time frames. So there's no reason at this point in time to really be looking at it, especially not futures. So let's go to our spot market chart now and take a look what's going on. So obviously the spot market, was dictating the price action over the weekend. Here's our daily spot market. Once again, same thing. We have put in a very clear divergence point between these two peaks, between this peak and this peak, between this peak and this peak, and then arguably, that was our bearish divergence that has led to this consolidated downtrend that we have been inside. And we have very much been inside of a downtrend since this rejection back here at like November 21st. So all the people that are calling for the December rally and all that stuff, sure, anything's possible, but do you see anything in the charts that's telling us we're going to get a December rally? I don't see anything right now that's telling us we'll get a December rally. More accurately, Bitcoin topped in 2013 in November and 2017 in December. So I think it's more likely we top already in November, or we top in December, or maybe even in January. But I think very, very likely that this 4-year cycle is coming to an end. And for all the people that are saying lengthening cycles and diminishing returns and I mean, diminishing returns, sure. The more expensive an asset gets, the less likely you would expect it to see percentage gains of the same amount. But do we see anything that's telling us the cycle is going to last more than 4 years? No. Do we see a math equation written by Satoshi, the creator of Bitcoin, that says there will be a halving event every 4 years and that will lead to, the 4-year cycle? Yes, we definitely do. So while we're in a macro, monthly bull market, bull trend, on Bitcoin, we have gone through 3 smaller daily or weekly trends, each of them was basically like 3 years of bull market, 1 year of bear market. So we're at the end of that 3 years of bull market, basically. Arguably you could break it up to like 2.5, 1.5, or 2 and 2, depending when you're looking at it. But here on the screen, let's talk about how I determine a bull or bear market. Real quickly, just using the easiest indicator possible, the TJD Master. It is color coded. It's as easy as it gets. So once we flip over the 200 exponential and simple, we're back on top of them, and they have a positive slope to the upside. They will flip over blue. So once they turn blue, both of them, we almost always get what's called the reversion to the mean, which is we break above them, we come back down, retest them as support, they hold as support, and then we start to go into an uptrend. So when did that happen? Well, depending if you count the retest of support or just once we were back on top of them and flipped them over blue, whatever you want, let's say $8,600. So from that point, from $8,600, we stayed on top of them the entire time until we finally crossed below them here. We didn't technically flip the 200 simple over until here, but obviously that's a slower lagging indicator. But if we don't hold support right here and break down below them, that's 40,000. So we did flash a bear market here, like short term, temporarily, on the spot market chart, but we were able to recover those levels. But what do we expect? Well, we expect that reversion to the mean. We break down below them. We start to get rejected. We expected the reversion to the mean. We had triple bearish divergence here. We had triple bullish divergence here. So we were able to get out at the top. We were able to get in at the bottom and then ride this to the upside, taking profits along the way. Once again, we saw the divergence take place. We had the reversion to the mean once we broke back above them. We tried to act as support. They did act as support, and then we went to put in a new high. So now here, once again, reversion to the mean. We're coming down. We're hoping, expecting, potentially going to find support right here. But again, we have broken down below the 200 exponential. So here the 200 exponential is red and flipped over. On the Bitcoin futures chart, the 200 simple is above and it's flipped over red. So at this point in time, we're kind of getting mixed signals, but we would expect this area to act as support. So now the price action that we see over the next couple of days or weeks is going to determine. So all the people that are calling for $100,000 Bitcoin by end of year, $250,000 Bitcoin by end of year, it's looking much, much less likely to happen. Matter of fact, when the 821 crossed right here, it was looking very unlikely to happen. It was possible we got a move like this, but I specifically spoke about how we got the 821 cross here, tried to save it, and then got rejected and put in a new low. And that's exactly what's happening now. The only difference is we haven't actually taken out our lows yet. So once again, we're being very careful as to what we see happening right now, but this is looking like that expanded flat, and potential correction pattern, which we have already put in the A, of the flat, the B of the flat, and now here we would expect the C to come down and potentially take out this low. So I think there's a very high likelihood that we're coming down to revisit the high 30s or mid 20s in the near future. Does it have to happen? No, it does not. But it seems much more likely. And the fact that we called out the scenario ahead of time and we're ready for it if that potentially did happen prepares us exponentially better for if and when that does happen, because we were able to take profits along the way and not get crushed. And we got out of that bat trade like literally at the top beautifully. We got out of the Matic trade literally at the top beautifully. You really just can't beat it. So as far as simplicity's sake concerned, if you're going to scalp on the daily time frame, the 8 and 21 work perfectly. If you're going to look at the overall trend, the 200 exponential and simple work perfectly. And when you combine those with the Jewel Thief and the TJD TDMACD, absolutely crush it. And that's why you see me use these three indicators consistently, effectively, and honestly, they're all but flawless in my opinion. So. But here we obviously got that hard sell signal. We had the 821 cross. We had the bearish divergence, and then we broke down. So this is where we expect to find support. Let's see what happens over the next few days, and will give us a better idea as to what to expect. But it looks much less likely at this point in time that we will be putting in a new high before year end. So now is crypto telling us that the stock market is going to start selling off? Well, it's a little early to tell that now. But there's a strong argument to be made that crypto has been trading with a high correlation to the stock market, just with, increased beta, obviously. So we'll wait and see what happens. But I think there's a good possibility that this was a liquidity event, and now people are going to be selling off in the stock market, and then we could see continuation to the downside in stocks and crypto. Stocks did technically start selling off like heavier, faster before this happened, not percentage wise, but like in relation. So maybe stocks were predicting a crash in crypto. Maybe crypto is predicting a crash in stocks. We'll have to wait and see. But we're seeing quite a bit of weakness. And as we get into the altcoins, as we get into like some of the smaller cap stocks, tech stocks, etc., we'll see quite a few of them have been and are still in a bear market. And many of them are down 30%, 50%, 75% from their all-time highs. That is not what a healthy market looks like. Not for stocks, not for crypto, not anywhere on earth. Hey, what's going on, Cart King? Appreciate you, brother. Thank you for the compliment, man. Glad you enjoyed the TA. I try to keep it real. I definitely have a little fun with it. I've been known to, make lewd comments or offensive statements, but I do speak the truth. Doesn't always make me the most popular, but definitely is the financially best situation to be in for like an actual trader or investor. If somebody's like telling you the truth. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Goal here is not only to tell you what I think is going to happen, the probability, but also to help people learn why I'm doing things a certain way and why they work consistently. And, with hopes that you'll be able to do technical analysis yourself on assets I'm not even looking at and, profit or share with other people as well. So here we have the traditional indicators. We have stochastics on top. Again, just kind of going sideways here. We have RSI basically teetering on the edge of the bearish control zone. And again, the stochastics rolled over just like we were discussing about this rejection between the blue and red. We got that exact rejection, sold off. This psyched a lot of people out because we started seeing the lighter color histograms. But again, we see the rejection right here. We see the rejection right here. We see the rejection, rejection, rejection. Have to be real careful just trading these crosses like some people like say they do. So for all the fake people that are just like, all you have to do is buy when it crosses up and sell when it crosses down. Sure, in hindsight, it's easy to point at one specific cross and be like, should have bought right here or I bought right here. Most of the time, those people are fake. If someone's not telling you what they're doing ahead of time and why, they're probably just hindsight doing technical analysis or just full of crap because they want to sell you some course or, whatever. So be very careful with those people. Real technical analysts have like clear defined areas for trade setups, for profit taking, for stop losses, all this different stuff. So they don't just say, see, if you would have just bought right here and then I'll show you the measured move, you would have made this much money. Good job. That's not real TA. That's hindsight TA. So here we have Ethereum, obviously had a very aggressive sell-off. I did like how quickly it got bought up, but on an aggressive sell-off like that, have to be very careful because a lot of times it will be a liquidity event, like stop run, stop hunt, or just like cascading waterfall of stop losses. So the purchase afterwards, like that initial candle, while this does look, technically bullish, basically looks like a hammer. It sold off a lot, but got bought back up. We do have to be careful because a lot of times when you see a hammer like this aggressive in a single candle, you will actually see the waterfall starts and then we'll just fill all those orders once again. Basically it was like a big sell-off and then bots just push the price straight back up and then a bunch of buy orders come back in and hold it. So got to be real careful. Don't want to just jump right in and say it's bullish now because the hammer. It's a reversal candle. We're going to the moon. No, not really. But we do have a low right here. We do have a higher low right here. And technically we have a higher low right here on Ethereum. We did, however, have a high back in November. And then we put in a lower high here. So we don't have the same bearish divergence that we're paying attention to on the daily. But can't really argue that we're in an uptrend. I mean, we're overall in a macro uptrend. But as of now, we have a high and then a lower high. We have a low and then a series of, potentially higher lows. So if we have a high, a low, a lower high, and then we have a higher low, we're basically just forming like a pennant or a triangle pattern, which is technically like non-biased. So, it's technically not going to be like a bullish or bearish pattern. But if we pay attention, that will give us some clear defined levels that we can look for. A break above or below those levels, potentially looks like bullish or bearish. So, essentially, we're just bouncing around inside this range. We expect it to continue trading inside this range before, until it doesn't. But we saw something very clearly happening here that once again, another level of technical analysis that was telling us we were getting ready to have this capitulation move. We had a very clear, definable range with multiple touches on the bottom of this ascending channel, multiple touches on the top of this ascending channel, an attempt to break through it that did not last. And then we have clear support at the heart line and resistance support at the heart line, resistance here at the heart line, came down and found support for a third time on the bottom of the range. And then we broke it, came back up, retested it, and could not hold that level. So now we are outside of this channel that has been in effect since July of 2021. So at this point in time, if we don't reclaim that channel, I would expect a further drawdown. So the real question is, are we going to be fibbing from the bottom of the previous move to the top right here? And then we're looking for where we come down to, which in this case, that would be our green fib. We can see here, we were already at the 236. That was our initial sell-off. Bounced around, put in a lower high, and then we would expect the 382 or the 0.5. I like to use 2 fib levels lower. So if we touch the 236, a 2 fib level move would be down to the 0.5. So we slightly overshot it, came all the way back up, and now look where we're seeing resistance is at the 236. So if we can't get back above the 236 now, I think we'll very quickly revisit the 382 at 3,851. If not, come back down to the 0.5 at 3,587. Now, keep in mind when we have a big liquidity event like this and a stop hunt or, a waterfall or cascading stop start taking effect, that it's going to be a slow bleed if we come back down to those levels. We're not likely to see just one big aggressive sell-off. Now, it is definitely possible, but usually it takes momentum. Like we had a sell-off, a big sell-off here, a very clear breakdown and loss of this support level. Very clear breakdown and loss of that support level. And then we got like the heavy sell-off come in. So, it's unlikely that we just see like immediately a big dump, but coming back down. But Ethereum looks okay. It is definitely rolling over. Still looks better than most cryptos, including Bitcoin. But not particularly amazing at this time. It's still well above the 200 exponential and simple. 200 exponential is above the 200 simple. We did get the 821 cross to the downside, so it really needs to reclaim some of these levels, or it's going to start looking more bearish. We also lost the blue slope line. It flipped over red. Once again, telling us from back here that this push up was likely to be a lower high rejection, and then we would see continuation to the downside. We can look at the weekly really quick on Ethereum as well. Still looks pretty good. Still on top of the 8. Did not see that same bearish divergence between these 2 points. If we consider this to be a part of this larger move, and this is just one move, we do see bearish divergence between this move and this move. I don't like cherry picking, to tell you the truth. And again, we see a lower high here and a higher high here. So I don't like cherry picking, but oftentimes, 2 red histograms will tell me like that's a separate move. But a lot of times you will see a move within a move, and this is actually just like one move. This is actually just one move. So we really should be comparing the peak here to the peak here, especially on longer time frames. On shorter time frames, I really don't like to do that because I feel like you're just cherry picking to get the data you want. On something like a weekly though, it's much more viable to use like 2 macro higher high points or something like that, or look at this as a potential fake out for like a divergence point. So again, Ethereum looks better than Bitcoin, but the last time we saw the hard sell signal and left the bullish control zone, we did see a very large candle. I mean, this was a big dump for Ethereum here, and we are literally teetering on the edge. We are at the edge of the bullish control zone. We are about to cross out of the bullish control zone and cross the blue Stoch below the red or pink, purple, whatever color it is on your screen, Stoch. So we're about to get the hard sell and the exit of the bullish control zone. Here we got a decent little dump leading up to it. Nothing crazy. Here we got a pretty big dump afterwards, and basically Ethereum sold off from 40,000 down to, as low as like 18,000. So we saw over a 50% dump. So if we're about to do that again, is it unrealistic to think we're about to see like a 20 to 50% dump on Ethereum? I don't think so at all. I think there's a high likelihood that we do see that in the near future, depending on what Bitcoin does. And can Ethereum stay strong and Bitcoin goes weak? Sure, anything's possible. I mean, Ethereum has broken out of the chart pattern we've been paying attention to. So again, Ethereum is much stronger than Bitcoin as of now. It has technically taken out the daily high on this cycle for like the Ethereum to Bitcoin ratio, has momentum in its favor. But again, it's very close to losing this level. So again, if you were just going to hodl either Bitcoin or Ethereum right now, based on this chart alone and Ethereum's chart alone, or really the two of those together, I would much rather be hodling Ethereum than Bitcoin right now, just based on the technicals and the overall health of the chart. So let's look at the total market cap next. Again, spoke specifically about how this did not look healthy to me. This is the weekly market cap. We very clearly see a high right here, hard sell signal, bunch of red histograms. That was the top from May. And then here we see a new high, which is higher. And then here on the stochastics, we see a much lower high or same high, slightly lower high. And then a hard sell coming out of the bullish control zone. And then here on our TJD, TDMACD, we see a much lower high in comparison to the much higher high price action. Again, weekly bearish divergence, followed by a pretty hefty dump. Basically went from a $3 trillion market cap to a $2.2 trillion market cap. So, I mean, maybe that's not a big deal to you, but I mean, we did just technically lose like $780 billion worth of value. So, better part of $1 trillion. It's kind of a big deal if you ask me. We also lost the key support level right here. We have broken down below the 8 and 21. If we stay below them long enough, we'll get the 821 cross to the downside, and we'll be focused on that 1.29 trillion level. We could have some temporary support here, but we kind of already bounced that area. So if we really start closing below 2 trillion, this is going to look like the danger zone. Bitcoin dominance. Again, we're not seeing much of anything happening here. We are hanging out at this level. So we are potentially going to find support around this level and move up, potentially going to break down from here. We have basically stochastics at the bottom of the range, RSI sort of putting in some bullish divergence, and then we have the MACD just kind of putting in some bearish divergence between the tops of the histogram. So not getting much from this chart right now, not on the weekly. Basically just got to wait and see. And sometimes that's the case. Sometimes we get mixed signals or no useful information. That's completely fine. The more things we have lining up and giving us the same likely outcome, the more reliable that outcome is. So, and sometimes we're just not going to get that reliability, and we're just going to move on to the next. So Shiba Nasty, Shibcoin, Baby Doge. Oh, no, wait, that's an actual crypto. Shib essentially broke down from that triangle, came back up, retested it, came back up, retested it, and now this thing is just bleeding out. Let's be real here. The puppy is in a garbage bag, driving on the highway, and the window is down. And let's just say mommy and daddy don't want to take care of that puppy. So it's probably going to get thrown out the window. And, it is what it is. Not a pleasant analogy, but this dog's likelihood of survival, not high. Not high at all. We already came down to the 236. That was our initial support here in green. Now here we have touched the 382. So assuming we see continuation to the downside, I would expect the 0.5. That is also clearly support from on the way up here. So is SHIB going to 0, 0, 0, 0, 2, 3, 3, 5? Yes, probably. Does it have to? No. But, I mean, we could retest 0, 0, 0, 0. I don't know how many zeros that was. A bunch of zeros and then 4, 6, 8, 0. But I would expect that to act as resistance. And then obviously this is our measure move breakdown of the triangle. Because it's on log scale, it looks gigantic. But, that is essentially pointing us back down to like non-existence, to dust. It would be 0, 0, 0, 0, 0, 8, 2, 1. So I think 5 zeros that time. A bunch of zeros and then an 8. Looks terrible. I mean, we do not want to see SHIB breaking down from these levels, but let's be real. Largest circulating supply, no actual function, meme coin. Let's look what Doge is doing. It's getting crushed. Probably going to continue getting crushed. Looks like trash. Oh, let me look at the moving averages really quick on SHIB. Oh, never mind. Don't feel like loading them up. So Solana is next. SOL. Had that attempted breakout. Got the majority of the measured move, fell short, put in a lower high, and now we have broken back inside of the channel. That is not what you want to see. Basically a failed breakout or throw over, failed to act as support. We came all the way back down to the bottom of the channel. So we are clearly respecting this channel. It's a good channel. It's a great channel. Every once in a while, we're going to poke ourselves out of the channel. But if we cannot sustain, we cannot keep on moving in that direction. So here we break back down to the bottom of the channel. Here we're hanging on to the heart line. So what's going to happen from here? Well, we're in the medium zone. We're in the neutral area. A push back up, takes us to the top of the channel, $200. Hard resistance because it's a round number as well, and the moving averages are in our way. A sell-off takes us down to like 167. We're right smack dab in the middle right now, so not a great trade setup. If anything, I would say favorable to the downside as we see the stochastics and momentum favor towards the downside as well. So doesn't look great. Let's put a updated Fibonacci. So let's take a fib from 115, which was the beginning of this most recent pump, and let's put it up here at like 259 to the top. And just kind of fibbing those levels, we see our initial push down was a 236. That was our support. And then after that, we see 190. That is our current level of support. And then we see again, we already touched the 0.5 at 173. So if we were going to continue to the downside, the next target after 173 to the downside would be 157. If we were going to push back to the upside, it looks a lot less likely, but our target would be like 213. So at this point in time, the easy road for Sol looks like it's to the downside. Does not look good. AVAX, Avalanche, flavor of the week. Obviously spoke about this one. We overshot our target slightly on this one. Took profits, get out of the way on this bad boy. Because literally the avalanche is building. The snowball is getting bigger and bigger, and it's getting ready to, wipe the ski town off the face of the earth. So again, we can just do a quick little Fibonacci. Let's do it from our breakdown low right here, which was 51. And let's take a look at that up to the high right here of 157 and see what we're doing. Not seeing a ton of confluence on the green fib I just put into place. We technically already touched the 618. Not seeing like super clear interaction with those levels. So maybe that's not the place to pull from. Let's look back actually at our previous little low right here and see if we can see a little more confluence. Okay, that looks much better. I like that much better. So look, this one's going back to our dump back down here at 31. And again, sometimes I'm not going to pull from the right area. This was technically the all-time high, so I wanted to pull from the pullback. But, maybe we wanted to pull from this one here. So let's look at the confluence now. From that low to here, we see actually confluence on the way up at the 382. We see obviously our top. We come down perfectly, to the 236. We see our support right here, lower high. And then now here we are exactly at the 382. So now that green fib looks much more reliable. So let's make that a little thicker and we'll leave it on the chart. So next target, if we push back up to the upside, we're looking for that SR flip. We're looking for what was support to potentially act as resistance. That's that $100 level. Again, nice round number, likely to act as resistance. Also, our moving averages are right there. If we break down from here, likely to touch the 0.5, which is around like $68. Depending on how long we get there, or if we go lower to the 618 or 786, we have the 200 exponential and simple moving average moving to the upside. So we could look at those potential levels as well. Assuming this kind of keeps creeping to the upside, somewhere around like the low to mid 60s for the 200 exponential, somewhere around like the low to mid 50s for the 200 simple. We have a bunch of red histograms. We got the hard sell signal exactly at the top, left the bullish control zone, hard sell signal trending down, tell us get out of the way. 2 red histograms in a row for the first time, basically since we crossed 821 to the upside. After that, we top out, start going sideways, break down, lose the blue slope line here, and now it has flipped over red. So this looks very bearish. We're at a temporary support level. I think this area is what we're going to pay attention to. I think the mid 50s are what we're paying attention to for this. So depending how aggressive the avalanche gets and how many ski towns get wiped out is how bad this bad boy looks. But does not look great right now. And keep in mind, Solana and Avalanche, Ethereum and Bitcoin are like 4 of the best looking cryptos, with the exception of a couple other like big ones like Crowcoin or Binance Coin. The majority of the crypto market looks much more like this. So speaking of trash bag looking charts, XRP just happened to pop up on here. So here XRP broke down below the 200 exponential and simple. Oops, I'm on the 4 hour. So yep, it's not as trashy. Hang on, but still looks bad. So here we have, back here when we crossed below the 200 exponential, we did not lose the slope on the 200 simple. It stayed blue. But now here the 200 simple has flipped over blue, and now, pink. And now here we lost the 200 exponential as well. So We were talking about this on, what was it, Wednesday's stream, and I specifically said how XRP has entered into a bear market for the first time this entire cycle. So the last time we had a similar situation like this was when we flipped bullish on XRP in July, and it was 21 cents. So now, at $1, we flipped bearish. Obviously, over, I don't even know how many months ago that was. A lot of months ago. It was 5 months ago or something like that, depending on how you're counting. So it does not look good. We're also looking like we want to come down here and threaten these lows. So got to be real careful XRP doesn't shoot down to like that 51 cent level. A lot going on here. What do we got going on here? Okay, so that was our bearish retracement. Got rejected at the 618. So let's slap a quick bullish retracement on here and just look at this move. Man, there's just so much going on this chart. Let's get rid of the bearish one. Look at the bullish one. So yeah, we're finding support at the 382. Broke down from the 0.5, just about at 618. This was our measure move of the ascending channel too. So we fulfilled that break already, hit the measure move exactly. I believe last stream I literally said, actually I know for a fact on the last stream I literally said XRP to 70 cents. I was wrong. XRP actually went to 65 cents. So it's actually worse than me talking trash about it. So everything I said about XRP is actually worse than that. So you could say that I am a kind and benevolent technical analyst because I didn't say XRP was going to 65 cents. I said it would go to 70. So you're welcome, XRP community. Hard buy signal, fake out, rejection, breakdown. There's a lot of support at like 62 cents. But realistically, if we come down to 50 cents and break that, it's going to start looking real bad. It looks bad now, but it's going to look real bad. All right, moving on up. So, stinky linky, chainy linky. Chain link, again, topped out back here in May. Barely been hanging on to the 200 exponential and simple. We had a very clear support line here in green. We broke down from that support line, weeks ago. Barely we're hanging on to 200 exponential and simple. And if we turn off our drawing tools, we will notice that Chainlink confirmed a bear market on November 21st. So again, if we turn off, this is sometimes the easiest thing to do. Let's turn off the actual price action and just look at this chart. Keep it simple. So we're very clear bull market. We see a short-term, correction taking place, the 821. We see the 200 exponential switching red. That's danger zone. We see the reversion to the mean. We find support at 200 exponential. We move back up here. So at no point in time was the 200 exponential and 200 simple both red or pink at the same time. And then here on this previous breakdown, we see the 200 simple was already pink or red. We see the 200 exponential has switched over red right here. So here we confirmed a bear market on November 23rd. So we have been inside of a bear market, for over a week now. And we are seeing now continuation to the downside. So don't look at the ticker. Don't look at the price. Don't look at anything. Just look at what this indicator is telling you. And it's going to tell you 100% of the time, is this thing in a bull market or a bear market based on my metrics, based on what, Wall Street and key people use. Wall Street typically uses 200 simple moving average. Crypto people usually use 200 exponential moving average because of the exponential nature of gains and losses. I like to use both. And then I use not only the price action above or below the 200 exponential and simple, but also the slope of the 200 exponential and simple, which is the determinant of whether they change colors. Now, with the 8 and the 21, the green moving averages that flip over pink and red, you will notice they do not switch based on slope. They switch based on the cross. So I use the cross down of the 8 and 21 or cross up of the 8 and 21 to switch them between red and pink or green and dark green. But I use the slope of the 200 exponential and simple moving average to determine the overall trend and whether we're in a bull market or bear market. You can do alternatives. I've created an indicator that allows you to switch between those. But this to me is the most effective. And this indicator, this single indicator, if I could only have one indicator for the rest of my life and that was it, and I could only use that indicator, nothing else, no RSI, no stochastics, no MACD, no nothing, just this. one indicator, this is the one I would pick. In my opinion, it is by far the best indicator ever created. And I'm not just saying that because I created it. It's just absolutely amazing. It's simple. You could explain it to a child how to use it, and then you could show them 100 charts. They could know nothing about anything, and they could say, this one's blue and this one's blue. Bullish. Well, you'd have to explain what bullish means first. This one's red and this one's red. Bearish. Simple, easy, effective. Find me a better indicator, and I will use that one. But I don't think any exist. That one, however, is restricted to the trade group members only. But you can get permanent access to that by joining the trade group, obviously. It is a paid group, obviously. But also, all the rest of the indicators I have created and use are all offered for free. So try to give away as much as I can for you guys. Give away trade setups, give away targets. Don't think about it as having to, pay for the indicator or, pay to be in the group or whatever. Think about it as me giving the indicator for you showing your support. And the truth is, if you're not trading or investing and making money in these markets that easily pays for, the cost, you're probably not ready, to take your game to the next level. There's probably plenty of free resources, either from me or from other people, that will do you better to build a solid foundation before you need to be in any kind of like trade group or anything. So, but arguably the indicator is the best. You're the best indicator. I love you. You're beautiful. You do everything right. Matic next. So obviously crushed it, absolutely destroyed it, dominated it, decimated it. The Matic trade was beautiful, over 40-something% to the upside. Once again, called this one out perfectly in the group, called this one out perfectly on the channel for weeks upon weeks. Even came close to a potential stop out based on a, candle, but obviously not based on closes, which is what I use. But from that area, found support down here. Keep in mind, this was while the majority of the crypto space was doing nothing. The majority of the crypto space was doing nothing over the last couple weeks, and we were able to capture a 42% move. So absolutely crushed it. Cannot be mad about that. Great way to start off our December. Took profits at the top of the range. Did not get greedy and try to take it all the way to the top. I specifically announced in the trade group exactly when I was closing my position. And literally from the moment that I closed my position, within a couple hours, we saw that dump, which was over 33% move to the downside. So we made 42% on the way up, and then potentially could have rebought, back down 33% again. That is how you trade, ladies and gentlemen. Again, this is not financial advice. I'm not your financial advice. These markets are extremely volatile, so please do your own research to trade responsibly. I like to think that, me showing risk-reward ratio trades on stuff like this, 42% reward, 9% risk, 4-to-1. Let's flip a coin, bullish or bearish. If I'm right, we get $4. If the market's right, or we're wrong, we lose $1. So will you bet $1 to win 4 with a 50-50 chance? Or, maybe a little more because we got a sweet edge when the 821 crossed to the upside, when we had a hard buy and momentum in our favor, when we had a blue slope line and multiple green histograms in a row inside the bullish control zone. Yeah, buddy, I will. Yeah, buddy. But now we do see we have left the bullish control zone. The stochastics looking like they want to cross the downside. We have seen an equal amount of red and green histograms over the last 4 days, and obviously a pretty severe dump. We've been operating inside this ascending wedge for a while, had some very profitable trades on the way up, and overshot quite a few of our targets. We had the initial 26% move back here, well overshot that, hit our take profit zone perfectly for the 786, put in a lower macro high as expected, captured the 42% here, and then once again, just going to wait now. Wait for our next move. This is a bearish pattern. So what happens here? We have a high. We sell off for a while. We push back up, put in a lower high, and then typically we will break down from this pattern and see a measure move to the downside. So if we take from the middle of the pattern roughly, and we take from the top to the bottom, and then we just draw out our measured move, this is probably going to look really bad because of log scale. But if we draw that from the breakdown, so if we assume this is going to keep going up for a little while, keep kind of range bound trading here for a bit, and then eventually we're going to break down, we could potentially expect Matic back at $1. So if we're back at 2 now, we could easily lose another 50%. And that's just on the measure move. Does not mean we can't come down and put in a lower low. Does not mean we can't find support before that. What it does mean, though, is, we're going to stay out of the way for a little while and wait for the next opportunity. And we don't have to love these cryptos. We don't have to love these assets. We just have to not hate them and see a favorable trade setup. That's all I'm looking for. Polkadot next. So Polkadot has been a extreme underperformer. We were talking about a potential breakout right here. I told you guys how weak it looked, and I just really needed to see us get back above the 8. We were unable to get back above the 8. We saw consistent rejections from the cross down right here. Rejection off the 8 in red, rejection off the 8 in red, breakdown from the 200 exponential and simple. The 200 exponential and simple are both red now. Polkadot has officially entered into a bear market. It is in a bear market. All the polka dots in all the world can't save you now. We talked about a potential trade setup right here. I told you I was not taking it because Polkadot has been so weak lately, but you could have arguably taken that on the breakout of the channel. But here we are. We had basically the throw over, the failed breakout, and now here we are back down at the bottom of the channel. So arguably, you could buy support right here at the 200 exponential at the 618. I think that was the previous high. So technically, I would actually probably want to get rid of this previous fib. And I would actually want to start paying attention to the low right here, to the high right here. And that would have like a little more validity to me. So you could arguably leave both, but I try not to leave too much just because it's tough to see, especially for people that are viewing on a phone. So here we had an initial pullback to the 236, found support, broke down from it, tested it as resistance. So we see this is what the market is looking at. Here we broke down to the 382, and now it looks like we're headed down to the 0.5. So Polkadot looks like it is going to $24.58, motherfargers. Potentially as low as the 618 of $20.24. Looks very much less likely that we will get another pushback up to $37. It is possible though. But yeah, Polkadot looks very weak here, especially confirming a bear market for the first time. Again, we saw the 200 exponential slope to downside. 200 simple did not break until way up here. 200 simple breaks to the downside because it's lagging, but 200 exponential is back to the upside. So this, again, the first signal, just like all the XRPs of the world, we have entered into a bear market. So we're seeing multiple cryptos in a bear market, and some of these were like the high flyers of earlier on. So basic attention token is next. So basic attention token, we had identified the 5-wave structure to the upside with a potential target at the 1.618 as high as $2. We did get out of this one at I think it was like $1.78 or something like that. I told you I was taking profits on this. Did not like the way this was starting to look after this big rejection, the push up, and then the indecision candle. So we did close that position out. Once again, capturing, it was like 100% move in like a 6-day period or something like that. This trade setup was posted well in advance on the channel. It was a 10-to-1 risk reward ratio. So I will bet you on this coin toss. If I am right, I get $10. If the market is right, it gets $1 of my money. Will I take a 50-50 bet all day, every day with 10-to-1 risk reward ratio? I sure will. And we actually had crushed right before that on the wave 3 up right here. We had a 16% trade setup in play, and it ended up pumping up like over 100% again right before that. So basic attention token has been absolutely stellar. And again, this was happening while the rest of the market was basically doing nothing. So BAT still looks strong right here. 200 exponential and simple, both angle to the upside. But based on just the power of that move, we know that BAT is notorious for having big pushes to the upside and then big sell-offs, big pushes to the upside, big sell-offs, big push to the upside, big sell-offs. So we don't want to get caught holding the bag on this thing. I specifically said, I think it was last stream, that this is the first time that I have not had some sort of BAT position in a long time. I usually have at least a little something, but I am cleaned out. My last BAT has broken. I am batless for now. Uniswap is next. Again, Uniswap looks terrible. We had a ascending blue support line right here. We tested it again. It lined up perfectly with 200 exponential and simple. We broke down from it, retested it as resistance, and now we see we have officially entered into a bear market. 200 exponential and simple are sloped to the downside. We have gotten rejected off of them, and then we had that capitulation move come in. We will see that this has actually retested the lows from the initial breakdown here too. So Uniswap looks especially weak. Again, this was an early high flyer. We got back in, I can't even remember. We got in Uni at like, I think I bought into this thing at like $2.80 or something like that, $2.80. So yeah, I mean, and got out, I mean, along the way, but I think $40 was like our last target, 42. I can't remember. This thing has just been an absolute high flyer, but it's just not popular anymore. There's too many other trash bag cryptos that do nothing why worry about something like Uniswap that actually serves a purpose? It's old news. It's garbage. It's a boomer coin. Let's buy whatever the new hot piece of trash that does nothing but has a good white paper, and we'll buy that instead because maybe that'll 100x. Like Squid Token, I hear that was a good one. So yeah, Uniswap bear market looks like trash. Will probably continue to look like trash. Yeah, I mean, we could throw a bullish fib on here and see what's going on, see how we're respecting it. Again, we're very clearly respecting it. Let's get rid of this trash right here. So we see we topped out right here, going from the bottom in May 22nd to the double top basically on September 21st. We see obviously once we put in that top, we sold off right away to the 618, aggressively to the 382. I mean, we topped out, came to 236, double topped, came to the 382, came back up, barely could hold the 236, then came straight down to the 618, came all the way back up and could barely hold the 236, and now here we have sold off past the 618. We touched perfectly the 886, and we're finding temporary support at the 786. So this thing looks like it is getting ready to take out the previous low. I mean, it's literally one fib away from taking out the previous low. So we will then have a high, a low, a lower high, and then a lower low, and this thing will just look like it's ready to fall off a cliff. So bear market, Uniswap looks very bad. Probably the worst that we've looked at today, which is unfortunate because it's a legitimate project. And I don't say that often or lightly. FTT, again, same thing, descending triangle. Spoke about this potential move to the upside. Told you I was not interested in taking it. This is very dangerous, a bearish pattern, and looked likely to break down. It did, in fact, break down. We had the initial move down. We have now flipped the 200 exponential. Technically, the 200 exponential is red. The 200 simple was red, but is now blue. But if we stay below this for more than a couple hours or a day or have any further downside, this thing will officially confirm bear market. So, again, not looking good. Not looking good for FTT. Came down pretty well to the... So, again, we have from the low to the high here. Came down to the 0.5 almost perfectly. We had a wick down almost to the 618, slightly front ran it, but the measure move of the triangle takes us probably down to like $30, 29. So yeah, I would be looking at, and that's the next fib level down. So if this continues down 29, if it gets a retest back up, I would expect like $50 is resistance. I don't think we'll make it back above 50 and hold unless something quickly turns around in these markets. ADA, terrible bear market, very clearly bear market rejection, and looks like a waterfall. It looks like a bloody waterfall, a sacrificial pit of Charles's. The throat has been slit. It is bleeding out. It is barely still alive. It doesn't know it's dead yet. This is a trash token run by a trash man, and hopefully you don't get stuck living in a trash can. Hey, we did it. We got the rhymes. Yeah. So, sorry, Charlie. Sorry, Chucky. Bye, Cardano. Goodbye, Cult. Yeah. So anyway, doesn't look good. Does not look good. If only there was someone who saw it all coming and told us that Cardano topped out at $3 and told us to get out quick at $2.76. If only. If only. But yeah, I think $1 is a strong support. I think Cardano's coming down to $1. That $1 holla. After that, who knows what's going to happen? Probably goes back down to like 3 cents. No, that's not realistic. Maybe 10 cents. No, come on. Don't be mean. Maybe 20 cents. Come on. Don't bullshit me. If it breaks down from $1, it's probably a dead project. No, that's a little mean. Don't be mean. MicroStrategy is next. That's it for our cryptos. Let's look at our trash bag crypto fake indexes. So MicroStrategy obviously failed breakout. Could not get the measure move. Obviously did not buy MicroStrategy, nor would I ever, because it is trash, and Michael Saylor is a trash bag scammer, based on actual facts, not just my opinion. Holding the 200 exponential for now, barely. 200 simple has rolled over for the first time in this entire trend since MicroStrategy was worth $131. It's since then 10x'd, and now it looks like it's getting ready to do a 50x, of 50% x, but division sign and not an x. So it looks like it's getting ready to get cut in half. That's what I'm going for. Cut in half. So it's at 630. Looks like it's coming down to like 360. At key support right now, we have that yellow support. We have a 200 exponential moving average. We have the bottom of the triangle. This should act as support, but more likely than not, this thing probably just gaps down aggressively. Probably just gaps straight down to like 500. I would not be surprised to see pre-market trading on Michael Saylor's MicroStrategy at 500 or less. Maybe it just goes straight down to 350 though, because it's trash. And he's trash. And a scammer. Next. Robinhood. Yeah, speaking of throat is slit and it's just bleeding to death, that is Robinhood. Robinhood is on the race to zero. It is so far winning. It's doing really good at getting there. Yeah. I mean, this thing is trash. Who's even selling right now? It's got to be Vlad. So obviously everyone that's ever bought Robinhood ever is a loser, including myself. I am officially a loser as I did not sell some Robinhood. It's a small position or whatever, but like an idiot, I did not sell out of my trade setup. So now I am one of the losers. So it is what it is. It happens. Maybe tax loss harvest it. We'll see. Probably. The only reason I'm not right now is because we're so close to my target. I think it's going to 1860, which is the 1.618 Fibonacci extension from the low to high right here. So that's where I'm looking for a temporary bottom. So I'd rather buy at the 1.618 Fib extension of like 1850, ride it back up, and then sell there. I do not want to sell my position and then not be able to take advantage of this move right here that's potentially going to happen. Because obviously for the wash sale rule, you have to wait 30 days to buy, or you can't claim that as a loss. So again, that's United States. That's not tax advice. Remember, I'm not your financial advisor. I'm not your tax prepper or advisor. So don't listen to what I'm saying. I'm just drawing colorful things on a chart. And, I just honestly, I don't even know how to do technical analysis. I just go on Twitter and I look what other people say. And then I just come on here and pretend like it's my own original opinions, and I don't even write these indicators. I found a piece of paper on the side of the road and I picked it up and I punched the numbers into TradingView and it created this. So it was probably made by Satoshi. And all those recent statements I made are false, obviously. I do not even have a Twitter, nor did Satoshi write this indicator for me. Unless he crawled inside my brain and took over, which is possible because I do hear voices sometimes. Coinbase, again, just getting absolutely crushed. I do not often post short trades on the channel in a overall just ridiculous melt up bull market, but I was kind enough to post this one as people have been asking for the shorts lately and Coinbase looked like trash. So with the 6% stop loss and a potential target of 27% to the downside, with a 4.2% risk reward ratio, if you would have took the entrance on Coinbase, as we discussed, you are currently up 18%. And keep in mind, pre-market, you will probably make it to the target of 26% up. So anyone that took that trade, congratulations. Again, I would not be too aggressive with this, as this is our support area and take profit area, and we've technically overshot that. So I personally would be taking part of my position off the table. But realistically, with the price action in Bitcoin and the fact that this market is closed, Coinbase probably pre-market is going to hit like 250 or 240. And I would be looking to exit my short after that, at which point in time, if I had this short, I did not take this short, but I would, be doing that, because what's going to happen is a lot of other people are going to exit their short around like 140, 150. And then we're going to see buying coming in and people are going to think they're buying the dip, but really it's just closing a short. You buy. So we see a reaction rally. But I would be waiting to see how the pattern develops. But yeah, Coinbase looks like trash. Bearish control zone, red histogram, 821 across the downside, and just a little further on support. Wrecked. GME underperformed our breakout. Still was a nice move for anybody that took it. I mean, I can't remember. I thought I had a trade set up on here. Yeah, anybody that took it was up over like 36%. So as long as you didn't just like hodl, you're fine. If you did, you're lower than when you started. So good job. Good job, diamond hands. I have diamond hands, but I'm broke. That's a great strategy for being a loser. So yeah, at support of the red breakout line right here, GameStop Rooney looks like trash. This thing's got to be real careful. barely hanging on to the moving averages right now. Real careful. Couldn't tell you where this is going right now, though. I mean, if it goes down 136, if it goes up 215, but I think it probably just chops for a little bit here. AMC looks horrible. This was the move that we've been expecting, that we've been discussing, that we've been talking about. I gave you guys the potential for the AMC move to the upside. I told you that AMC is trash, and I didn't think it was going to happen. I would literally rather buy, $50 worth of popcorn and throw it in the trash than I would own an AMC stock. So here we had a very clear triangle that was playing out forever. We tried to break out of the triangle, and then we got a staph infection from eating other monkeys' poop and peeing in each other's faces. So now we've got an upset tummy ache, a staph infection, we're malnourished, and we've officially lost all of our money. So we took out the low from back here, which now is extremely, extremely bearish. We are well below the 200, well, not well below, but we're below the 200 exponential and simple. 200 exponential has rolled over. And, let's keep in mind what it took to get up here, so what we could expect to go down. So we had 2 candles, 2 days worth of price action took AMC from $18 to $30. 2 days. And it was a double. So this thing could easily get cut in half in 1 day, 2 days, 5 days, a week. I mean, you guys know where my target's at for AMC, $12. And, could easily go lower. I do expect some kind of support around $18, but this thing looks very likely to get cut in half. It's trying to find some support right now. We'll wait and see, but this is full-on danger zone, in my opinion. This looks terrible. Newegg, same thing. Beautiful trade setup here, 46% to the upside. Hit our target exactly. Took profits. Now it looks like trash, rolling back over. Probably coming back down here to put in a new low. Yep, looks horrible, horrible, horrible. Bed Bath & Beyond, same exact thing. Broke down from the triangle. Took the gap fill, 59% to the upside. Overshot it by like 70-something percent in like a gap up like couple day period. Got rejected at the bottom of the triangle, likely to just come down here and put in a new low. So I would expect Bed Bath & Beyond to continue going down. It is possible we find support right here and then continue to the upside. Much, much, much less likely. Very clearly in the bear market, 200 exponential and simple, both angles to the downside. Very clear rejection. Reversion to the mean, continuation. Reversion to the mean, continuation. So the continuation is to the downside in the direction of the trend. Garbage. DraftKings. DraftKings looked like trash. Hit our measured move of the ascending channel after our failed breakout. The throw over, the failure, came back down to the bottom of the range. Did not take the buy right here, although there was potential for that to act as support. Instead, it just completely melted down. Hit our target perfectly. Sold off from 46 to 28. So again, this thing has just gotten absolutely destroyed. I even specifically said I thought this was going to be a throw over right here because they were like coming out with their new acquisitions and all this stuff. And since then, we're down 56%. So absolute trash. We are at my level of support. We blew through the first level of support, held at it for a couple days, but now we're at the second level of support, $29. You could take a buy right here, arguably off of this support level. But realistically, this thing could just as easily go to 1850. So I just don't see any sign of life out of this. Consistently, daily putting in new lows, very clearly in the bearish control zone, bunch of red histograms. I'm just not looking for it right now. I'm not trying to buy the knife. If I was going to buy the knife on this one, if I was going to catch the falling knife, I'll catch it at 1850. I'll buy when Kathy sells because she's the worst trader ever. Kathy was on her knees with record outflows, tears in her eyes, blood from her nose. Oh, if you haven't heard my, sweet, sweet song to Kathy, you can find it easily by just going to the channel page. And obviously, I am a goofy motherfucker. But, hey, I was right about everything. I was right. Kathy Wood is making no money for anybody but herself. All she gonna do, lose billions, but just a couple percentage at the time. She constantly is like, I have a 5-year time horizon, but I'm a day trader. I have never in my life met a day trader with a 5-year time horizon. Stop making daily trades and buying overvalued crap. Stop day trading. You're not good at it. We have proof. We have proof by looking at your chart. So what do you guys want to look at? You want to look at commodities like uranium, gold, silver, all that stuff? Or do you want to look at the indexes of the stock market? Or do you want to look at the individual stonkaroonies like Tech and Friends. We're at 110 right now, so I'll go another, like, I don't know, 30 minutes or so, maybe an hour. So I'd rather just look at like one of those. So you guys let me know what you want to look at, and I will look at them. But I noticed that people have been appreciating like the excerpts throughout the week, and then the shorter live streams. It has been helping. I've had quite a few new subs along the way, so that's what I'm going for right now. Trying to build up the channel a little bit more. So you let me know. I'll do the Jeopardy countdown, but I'll do it in my head. Matter of fact, I'm going to take a drink really quick. So let me know what you want to see. Which of those 3 categories? All right. I'm getting the impression that you guys aren't even here for the technical analysis. You just think my voice is soothing or my jokes are hilarious. Okay, there we go. Silver. Thank you, David. I know there's a little delay, so I always try to wait. But so yeah, let's take a look at silver. We can jump around. I can do some of whatever. It doesn't matter. Silver XAG, again, not looking particularly great here. We have lost the blue slope line, bunch of red histograms in a row. We are revisiting the lows here. We are in a bear market, well below the 200 exponential and simple. Both are sloped to the downside. We have the 8 and 21 to the downside as well. We had a potential head and shoulders, off of our little mini head and shoulders right here, but that has very clearly failed. Matter of fact, let's get that out of the way. So now, once again, we did this once already. We did it back here. We broke down from the bottom of our parallel channel that we've been operating inside of since July of 2020. So over a year, this thing has been trading sideways. We found support here 3 times back then, a 4th time here. Here we found it as resistance after we broke through, but we reclaimed those levels. We got rejected off 200 exponential and simple. So that was our flip into the bear market, our reversion to the mean, and we got rejected. And now we're at support again. We've technically broken down below support. Silver looks like it's ready to let go. We got the reversion to the mean and got rejected, and typically we will see continuation. So if we enter into a bear market, we can't reclaim the 200 exponential and simple, we're likely going to see a big sell-off. And more likely than not, that sell-off is going to take us back down to the teens. It is possible we still reclaim this level and get a push back up, but at this point in time, I do not like the way the silver chart looks. It looks very bad. Bears are very clearly in control. If we switch over to the weekly as well, we'll see, obviously, anybody that's watching this channel for any amount of time saw when silver crossed the 821 to the downside on the weekly at $26.40. I said this thing looks very bearish. Since then, we've sold off quite a bit. We're unable to reclaim the 821 right here. So very likely we're coming down here to visit the 200 exponential, which is $21.13, or the 200 simple, which is a teenager, $19.50. So 21 and 1950 are the key areas we're looking for right now. Matter of fact, I will just put a horizontal line in place, just so we have the rough areas for when we're on the daily, so we can keep in mind. Because sometimes you lose track of where the moving averages are at on the weekly when we're on the daily. And I took off like the 377 and the 528. I obviously have some other indicators that help with all that, like show all the different time frame, everything. But I created this one because it's just so simple and so beautiful. You don't need all that other junk like the 34 and the 377, 528, 55, 50, all that junk. This just works so much better in my opinion. Horizontals plus this, plus stochastics and MACD, the Trader's Dynamic MACD just works so good all together. But yeah, silver does not look good, man. And then if we look at gold, I've been bringing this up for a while. The gold chart, obviously trying to hang on to the, bull trend. Technically, the 200 exponential is blue, or simple is blue again, but we're below it, bearish control zone. It's trying, but when we go to the weekly chart, this is what I'm really seeing here. This is what the top looked like in 2011. We kind of just chopped around, descending triangle, big breakdown. This is what it looks like again to me. It looks very, very much like that same signature. You know, and a breakdown takes us just to the 200 exponential and simple is like 1630. So does not look good. Don't like how this looks. And that's coming from someone who loves gold and silver because they're shiny and they're valuable and they're real money. But hey, the truth is the truth, my friends. And I'm a holder of physical gold and silver. I'm hodling metals. So that's a non-biased view. Okay, so I guess let's just look at the indexes then, because we can kind of cover everything. Let's rip through here real quick. I'm not going to look at GDXJ, any of them. So copper at support. Looks like it's getting ready to break down. Copper target's like $24. Commodities look bad in general. Lithium breaking down from the 821. We still have our target in play at 86. After that, we're looking at somewhere around like the 76s. Hydrogen, HYDR, LIT was the last one. Broke down just as expected, revisiting the lows as expected, as discussed. So it looks like we're headed down to like $20. Could easily put in a new low on this. Lumber, new high. So yeah, this thing broke back above the 200 exponential and simple. It looks good. It looks strong. Is this a speculative lumber play to the upside? Sure, probably is. But I mean, it's breaking out. It's reclaiming those levels. So, you know, lumber looks good. It looks very strong. USAS looks bad. Pot stocks look terrible. Breaking down from key support levels. Tilray. You know, I told you I wasn't sure these things had bottomed, and it looks less and less likely. It looks like all of these are coming down here to visit the lows. ACB probably going to like $4. Looks bad. CGC breaking down from support, getting ready to take out new low. I mean, we talked about this. This is the Eve rounding top. This is the Atom, you know, like pointy top, and we're at support right now. If we break down from this level right now, this thing could go real low. I mean, we could see CGC like get cut in half quick. This was the low from 2020, and that was the high from 2018. So if we take out that 2020 March low, I mean, this thing, it probably does go to like $5, maybe in the fours. Looks terrible. Pot stocks look terrible right now. Some of them are trading at like discount, like asset to book ratio, which is wild. But hey, when they're just losing forever, I think people are just tax loss harvesting them, and maybe like 2022 will be their year. But I mean, I really don't know. Maybe they'll be strong while everything else is weak, because they've been weak while everything else has been strong for like years. Uranium, okay, so called out triple bearish divergence, broke down from the triangle, headed down to our target. Still expect URA at 22. UEC, same thing, got the breakout to the upside, breaking back down, basically at support, 200 exponential and simple at like $3. So yeah, looking good. URNM, measure move almost played out. Expecting $70. We're still at 77. So looks like another 10% to the downside. Momentum headed down. Triple bearish divergence once again. We can see how effective these strategies are as I consistently post up my price targets and they are consistently hit. Like, I mean, it's ridiculous at this point in time. What is it, like 80% of the time? CCJ. Cameco, same thing, triple bearish divergence. We already hit my initial target to the downside, but we could easily hit the measure move, 200 exponential and simple. This thing could hit the teens, $19, something like that, $20. Caterpillar, looks like it's getting ready to take out that low. It's trying to push back up here, but does not look good. Officially in a bear market. Deer, hanging on. Still oscillating between the 200 exponential and simple. Still range bound. Momentum in its favor technically. This looks like it just wants to chop around. 364 to 320. It's probably just going to be range bound. AM, Antero Midstream Capital, just getting crushed, or corporation, below the 200 exponential and simple. Technically haven't flipped over the 200 simple yet though. Sell by sell at the bottom of the range. That's not really reliable for anything. Yeah, it doesn't look good here. Does not look good. At support, though. So maybe we see a bounce. I do still have part of that position open. Same with Cemex. Yeah, I mean, looks terrible. Looks like headed down, further down. We had a channel here. We broke down, formed a channel here. It looks like we're getting ready to break down. This thing looks like it's going to like $4.60. Keep in mind some of these things, though. I have just kept part of my profits as like a permanent position that like is market's money that lets me own the stock. So that's why I have part of these positions open. I'm not like still bullish on these things. Oh, sorry, I got sniffles. I thought I was about to sneeze. Yeah, I had some family in town last week, and they like just got boosted. If you know what I'm saying, they just got that jabbity jab jab, and they were like all sick. I'm sure from it. So naturally, I got gifted the fresh variant. I'm sure. So CLF. I mean, I feel fine though. Honestly, just a little sick. So CLF. Just gonna do a couple more and we'll wrap it up. Cleveland Cliffs. Again, does not look great. Has broken down below 200 exponential and simple. Looking really, really much like a double top. Looks like we were probably headed down to the 236. I think this thing's finally going to fulfill the measure move of the channel. 1550. Ford barely hanging on to support right here. I am very tempted to close this short position, or this Ford position rather, or cover it. Yeah, I mean, it's been so strong lately, but it just, I think my cost basis on this is like $7. So I'm just not trying to give it up because it looks like it'd easily come back down to like 14. So I think I'm going to close this position. GM, looks like it's double topping, slightly weaker, but overall does not look good. It's hanging on for now though, but it's at the 200 exponential and simple. Hasbro, again, could not get above $100. Barely hanging on to 200 exponential and simple. I mean, this thing has been literally just range bound at this point in time for like a year. So there's nothing to see here. Until it gets above 200 or below like 84, I'm just not even interested. Works breaking down from that blue support. Still looking to buy this at a much lower price. I'm looking for somewhere around like $1 for a potential scalp on this. We'll see as it gets closer. Any finally breaking down from the heart line, the 200 exponential, hanging on to the 200 simple. We're almost at my target. I'm really looking to get this at like 268. We've already broken down so much, and we took such profits on this trade. This could be an absolute crush. Just for a scalp though, I don't want to necessarily hold this, but I think we get it at like 260, 270, and this thing could do work. This looks like a potential inverted head and shoulders. I mean, it probably just goes straight to zero, but it's worth a shot for like the crazy move this thing could have. Walmart, so we got the breakdown at support, retesting it as resistance right now. If we break down from here though, Walmart could just get absolutely crushed. It's going to tell you the overall like legitimate, actual, non-doctored, like health of the consumer. So if Walmart is weak, America is weak because Walmart is literally the lifeblood of America. America. And if you've never watched People of Walmart, I highly recommend that you go to their website and just watch the disgusting follies of Walmart. The people in there jam us. They're jamming jams. KRBN, carbon credits, topped out at the heart line, showing a little weakness, hard sell signal, still in the bearish control zone, but looks like it wants to come back down. I think like $45, but this channel's been strong forever, so it probably holds. It's probably a buying opportunity, but depends what the market's doing. But overall, these carbon stocks are great. GRN, again, carbon exchange, traded note, or yeah, okay. So basically just carbon exposure. Again, hard sell signal, still in the bullish control zone at the heart line. Pretty strong still and hanging on to the heart line. But again, I would not be surprised to see this thing at $25. I would look at that as a buying opportunity. We'll see when it gets there, but looks highly likely. So yeah, I think I'm going to wrap it up there, guys. That's about the 1 hour and 30 mark. Appreciate everybody for tuning in today. Hopefully y'all enjoyed the technical analysis. Just a quick reiteration. 10-year treasury looks very weak and breaking down. DXY looks pretty strong and reclaiming the 8 moving average. So I would expect bonds to go up, yields to go down, dollar to go up. We're still looking at those key level breaks, either to the upside 97 for the dollar or to the downside for the 10-year yield of like $1.16 or 1.16%. And then just a quick look at oil real quick. Oil still finding support at that key level at like 66. So I would expect to kind of oscillate around this range. If it breaks down, still have the target of high 50s, like 59. If it pushes back up here, target to the upside of like 76. So well, there you have it, guys. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Appreciate everybody tuning in today. Make sure you are locking in those gains, taking those profits, harvesting those tax losses, not listening to Kathy Wood or all the Moonboy crypto channels out there. Use technical analysis, learn, do it for yourself, take profits, protect your principal, love your family, love yourself. And that's it for tonight, guys. Crypto Trend Trader, appreciate y'all tuning in today. It is 12/5, December 5th, 2021 at 9:25 p.m. Eastern Standard Time. And that is a brap. That's a wrap, ladies and gentlemen. Thank you, David Morella, for your comments in chat. And I appreciate your appreciation. Also for the comments from Edward and the Cart King. Thank you, guys. Everybody out there silently watching in the shadows. Appreciate you all as well. But most of all, appreciate the group members for showing their support and looking out for their boy and making all this possible, as I would probably have gotten bored and quit making all these long videos if it wasn't for the appreciation of them. So thank you all very much. Everybody have a good night, and we will catch you on the flip side. See you on Wednesday, 8 p.m. Eastern Standard Time for our Wednesday and Sunday streams. Peace them out.